Unbelievable, Steve. And certainly there's a lot of anxiety, and it's underscored when you're seeing these moves. We just saw stocks repair some of the losses, cut in half, but look at the VIX. The VIX didn't really drop under 20, so that anxiety we talk about is still quite relevant. October, that initial move in rates from 305 in the 10-year up to 325 kicked off the whole anxiety party, or volatility party, if you will. But I think right now you just have to be really conscious and focused on your portfolio. We look at sector rotation models. I think it's a great time to understand what sectors are going to be hitting on all cylinders moving forward in 2019. But I think you have to really mute some of the noise, because we have 8 weeks, like Melissa said before. We have 8 weeks until we get everything ironed out with China. And maybe there's some caveats, some asterisks. In the same way we saw the Iran sanctions. We were all worried about Iran sanctions. Then we found out a couple countries got the little 1, 2, 3, 4 dispensation, right? So I think there's a lot coming down in the market to grapple with. But at the end of the day, I think we're doing okay here as we're above 2,700 in the S&P 500.
So we need to hold that level, Jeff, in your view.
I do. You know, you saw a tremendous bounce back. We went down and tested 2,600 just about 5 trading sessions ago. We had a phenomenal 3-day, 1+% each day trading session. So now this 2,700, I think we do go back down and test, because it's really important to remember, Melissa, we've gotten so conditioned post-crisis. For the last 10 years, everyone thinks that assets reprice in an hour or a day. They don't. Let's go back to post-crisis 2008. Let's go back to the 1990s when I actually started trading down here at the CME Group. We see assets reprice over quarters. So this is a process, and I think Chairman Powell is understanding this process, so he's going to move forward with a rate hike. So there may be a little more pain to come, but I think this pain is going to present opportunities, and that's why I go back to finding the sectors that should be hitting on these themes in 2019.